ChatGPT maker OpenAI raises $40 billion, valuing the company at $300 billion. SoftBank alone invests $30 billion in what was the largest private tech funding deal on record. Workforce mobility platform Border Plus acquires Germany-based Onia Care, marking its first acquisition in Germany and paving way for Indian nurses to work in Germany. It further sets aside $10 million for merger and acquisition activities in India, Germany and other destination markets. AI platform Entwin AI secures 5 crore rupees in funding from Y Combinator. This funding will enable expansion of AI capabilities and accelerate customer acquisition among mid to large pharmaceutical companies globally. EdTech unicorn Physics Wallah is in advanced talks to acquire civil services coaching institute Drishti IAS for nearly 2,500 crore rupees as per Tracker. This comes at a time when Physics Wallah prepares to hit the IPO market. Online food delivery platform Zomato hands over pink slips to over 600 customer support associates within a year of hiring them, as per Money Control. This comes amidst a slowdown in growth in its core food delivery vertical, rise in losses in its quick commerce arm Blinkit, and increase in AI investments. San Francisco-based Chef Robotics lands $43.1 million in investments in its Series A funding round led by Avatar Ventures. The AI-enabled meal assembly systems company aims to accelerate production deployments of its robotic systems with this fundraise. Managed workplace solutions company IndiCube gets approval from market regulator SEBI for its 850 crore rupee IPO. The company filed for its DRHP in December last year. A major portion of the proceeds from the IPO will be used for capital expenditure. Those were the headlines that we're tracking for you this evening. But on what's brewing today, rural fintech Navadhan has raised 111 crore rupees in a Series A funding round led by NAB Ventures, the venture capital arm of Nabad. The company has said that the funding will be used to fuel business growth and enhance its Accent Tech platform. It already has over 700 crore rupees of debt lines available from more than 25 banks or NBFCs onboarded on its platform, with whom Accent enables API integrations. The fintech NBFC has grown its presence in 700 pin codes across 5 states so far and plans to go deeper in geographies and diversify its loan offerings. For more on this, joining me now is Nitin Agrawal, the founder of Navadhan. Nitin, thank you so much for taking time out and being here with us on Startup Street. You know, if you could start by talking to us about the latest 111 crore rupees that you've raised in the Series A funding and how it will be strategically allocated to enhance your Accent Tech platform as well as drive business growth.
Right. Thank you for having me. I think we have a very calibrated growth plan in terms of what we want to do with the money. We have actually, this is not the first fundraise, this is a Series A, and we've done a bunch of fundraisers earlier. Through this calibrated plan, we are building the Accent Tech platform. And this platform is very critical to serve the rural small businesses. And through these rural small businesses, we end up then making working capital loans to them, getting the funding from banks and NBFCs, which operate on these platforms. So the plan is to continue to do this calibrated growth, both in terms of building the platform, adding more partners, going to newer geographies, going deeper in geographies, adding more loan variants, and continuing this journey.
All right. And you know, you claim to have grown about 12x in the last 3 years, right? While maintaining good asset quality. Are you seeing any signs of stress in rural MSME segments that you operate in? And how confident are you of continuing to grow at this pace as the size of the business grows?
Well, you know, this year has been particularly tough for overall retail lending space. We've also experienced troubles in our space. Luckily for Navadhan, we have rather been less worried about it because of 2 reasons. One is that we do very deep underwriting. We have only 15% approval rates. And this deep underwriting has helped us select the right kind of customers and serve the right kind of working capital needs. Secondly, as we built our Accent Tech platform, we were very clear that serving the customer and being sensitive to the customers is going to be equally important. Hence, we have both people and tech on ground. Having customer fulfillment centers and officers on ground has also helped us maintain better portfolio qualities. And we hope, like you asked, as we grow, we should be able to maintain the traction both on the growth as well as on the portfolio qualities go forward.
Right. So hoping to maintain that. But, you also have over 700 crore rupees of debt lines available from more than 25 banks, NBFCs onboarded on your platform, right? So how much of this has been disbursed and what are the loan dispersal targets for the coming year or so?
Well, so far we've done about 500 odd crores of disbursements, and we hope to maintain the traction on disbursements as well as we go forward. I think we've been rather blessed on the lenders side. We have almost 27 of them on the platform. I think amongst me and my three other co-founders, all of us come from financial services, NBFC, and banking space. So all the relationships, and we have sensitivity towards knowing what these banks need. Well, the banks do want to serve the segment, and MSME is a priority both for the government and the banking space. But it's difficult to reach out the underbanked and the small MSMEs. That's where we have stepped in. Therefore, we have a strong belief that we will continue to get that benefit. Additionally, all our loans are also classified as priority sector loans. So that gives them an additional impetus. And then if you have an asset getting created for these NBFCs and banks, and you have a good portfolio quality, and these are priority sector classified and there are reasonably decent margins, there is no reason why we should expect the banks not to continue to support us.
All right. So you expect that support to continue. But, what are your expansion plans for the next 12 to 24 months, right? And how will you deepen your presence in existing geographies? Do you intend to continue focusing on the 5 states that you're currently in? Or are you also looking at moving into newer geographies?
Well, in the immediate priority, our focus is to move deeper in these 5 states. We are right now present only in 700 pin codes. I think we'll first get to about 3,000 odd pin codes within these 5 states. And as we move forward, we will then expand to more states. So we have a very calibrated growth plan in that sense in terms of which states, which year we want to enter. We'll probably go with that plan.
Right. And are there any plans for an IPO in the near future? And what milestones would you need to achieve before considering going public?
Well, IPO is a very critical milestone for Navadhan, and we are definitely building towards one. But that's definitely not a destination because we are building it for a 20-year story, at least, if not less. Therefore, the idea is that IPO would be a critical milestone in this journey to both, becoming a more responsible and visible player in the market, as well as giving exit opportunities and liquidity to our existing investors. In terms of what prep we are doing, I think we have built our company with a thought that eventually we'll go for an IPO. Hence, we are a very compliance-first, regulation-first business. So the internal processes are built in such a way that it becomes a little bit of a glide path for us. Having said that, I think at a stage when we have substantial capital absorption capacity, say 1,000 crore or so, and we have stable metrics in terms of predictable metrics getting offered, we should go in for an IPO because as you know it better than me, public market investors would like to see predictable metrics if they have to bite a bullet on an IPO.
All right. And, what do you make of the RBI's recently revised priority sector lending guidelines with the enhanced loan limits for various categories, including housing loans? They also broadened the criteria under which loans can be classified as renewable energy for PSL purposes, right? So do you see it giving a meaningful boost to the segments that you operate in?
Well, yes, I would say in general, yes, this would give a meaningful boost to overall economy and overall segment. Particularly for us, not as much because we are already a priority sector classified lender in the sense that we lend to MSMEs, which is a priority for both the government and RBI. So there are some other criteria in which we get classified as PSL, including weaker section exposures, exposure to women entrepreneurs. We also have about 4% of our portfolio in the renewable side. So multiple classifications already exist. This is going to be, in general, a more of an enabler for banking sector to expand the priority sector segment for them.
All right. And MSME, what are the longer term plans for Navadhan?
Well, MSME itself is a very, very large space. And within MSMEs, we have chosen to be in the rural small businesses loans, which are rather on the informal market side. And as you know, as India's demographic changes are happening, the informal markets are getting more and more formalized. I think we want to play a role there. In terms of how we want to grow, I think we'll stick to our MSME space. We'll stick to the underbanked and the missing middle part of the MSME space. But within that, we want to continue to enhance both our geographical diversification and geographical outreach and the number of loan variants that we offer. So we are, in fact, multiplying our loan variants and our service offerings, but we'll stick to the segment.
All right, Nitin, thank you so much for outlining your plans there with Navadhan. But we're completely out of time on the show. Thank you so much for joining us.
Thanks for having me. Thank you.
And moving on the hot seat, deep tech startup Astrome Technologies secures $10 million in funding. With these funds, it aims to advance its innovative wireless connectivity technologies, scale operations, expand product lines, and enter the satellite communication market. Now, this fundraise will help the startup venture into the thriving SATCOM market, which recently gained momentum after SpaceX entered India in partnership with top telecom players in the country. We are now joined by Venkatesh Kumaran, the president of Astrome, to discuss their road ahead. Venkatesh, thank you so much for taking time out and being here with us on Startup Street. You know, you provide E-band long-distance communications solutions. If you could sort of explain to us what it means in layman's terms, and you know, your flagship product is the Giga Mesh. Can you take us through what it does?
Okay, great. Thank you so much for having me here. So our first flagship product, as you rightly said, is Giga Mesh. And we actually, before I can really talk to you about the product, I want to talk to you about the technology that we actually developed 8 years ago, where we are one of the first companies in the world to have actually built a phased array flat panel antenna technology in a very high frequency, what we call millimeter wave frequency, between 70 and 80 gigahertz. So we are the first company in the world to have developed E-band radio that can actually drive longer distances, number one. Because conventionally, if you look at E-band radios that have been in vogue for the last 2 decades, there's no significant innovation that has happened in backhaul radios. Astrome has been a pioneer in innovating flat panel antennas, and we have kind of integrated that entire antenna inside one box. Now, just to give an analogy of what is the incumbents technologies, they have external parabolic antenna sitting on the tower. We have done away with the parabolic antenna and taken that entire electronics and put it as a flat panel inside the box, thereby reducing OpEx expenses by over 75% to service providers. Now, why does that happen? It happens because link alignment is such a very important piece in radios, and especially backhaul radios. So when the link misaligns, the customer, the end user, does not get any signal, does not get any broadband connectivity. So what we have done is we call them self-aligning antennas. So even if the link breaks for whatever reason, it could be very high winds in that particular area, or very, very high rain in that particular area, our patented technology, what we call electronic beam steering and beam forming in E-band, self-aligns itself without the need of a human intervention. And that's the main reason why operators and service providers save a lot of OpEx, and they can keep their SLAs to customers at a very high degree.
Absolutely. And if you could quickly tell us, we're running out of time. You want to drive innovation and create solutions that enhance connectivity on a global scale, as you just, mentioned to us. Can you sort of take us through the kind of clients that you're currently working with and the sort of impact that you've created?
Absolutely. The first vertical that we've addressed is rural broadband infrastructure market, both in India and the world. We've been successful in India, thanks to, I would like to kind of call upon a name, Ashwini Vaishnav, the then telecom minister, who actually supported us by, had faith in the technology, and we have proved it pretty well in the market. So rural broadband infrastructure is the first vertical market. So telecom operators are our customers. The second market that we have cracked is defense communications. So our customers are primarily defense forces, the Indian Army, and the Indian Navy at this moment.
All right. And, you're also looking to enter the satellite communication market with the funds that you raised, right? If you could take us through your plans on this front and the opportunity you see here, and how do you see the space heating up with the entry of SpaceX?
Oh, yeah, sure. I mean, let me answer the last question first. We're not too worried about SpaceX or any of the satellite operators entering the Indian market, because we are an infrastructure player. So satellite operators, be it SpaceX, be it Kuiper, or be it OneWeb, be it SAS, whoever, would actually take our technologies and integrate as part of that entire infrastructure rollout. Because we also make ground user terminals at a significantly lower cost than what they can produce by themselves, number one. Number two, we also are able to kind of put the entire, ground to air from a communications perspective for any enterprise today, right? And provide and beam high bandwidth connectivity to the remotest corners of the world. That is
right.
That is
And
second one on, I'm sorry.
Yeah, please go ahead.
Yeah, the second, the 10 million that we raised, a significant portion of that is going to go into business development, expansion of our sales offices, as well as deepening our roots in our core competency, which is technology. We will start to innovate so that the incumbents are like 3 years away from what we are doing both in space tech and the wireless technology. Of course, a lot of money is being spent in terms of new product introduction into both the terrestrial market as well as the space tech market.
Right, absolutely. And for the fiscal year ending March 2024, according to reports, you saw your losses reduce and revenues came in at a little over 8 crore rupees, right? If you could sort of take us through your targets for this year, and what about profitability?
Yeah, so what we intend doing is, our forecast is to kind of, increase that to 5 to 7x in the next 2 to 3 years, both in the terrestrial market as well as the space tech market. And we would definitely strive to become EBITDA positive in the next couple of years.
All right, Venkatesh, thank you so much for joining us on the show, but we're completely out of time and we wish you all the best on this journey going forward.
Thank you so much. Thanks for having me here. Thank you very much.
Absolutely. On that note, it is time for us to head into a short break. But coming up on the other side, Indian lab-grown diamond jewelry brand Firefly Diamonds has raised $3 million in a seed funding round led by Westbridge Capital. On the other side, my colleague Ritu Singh speaks to Adit Bhansali, the co-founder of Firefly Diamonds, to discuss its road ahead.
Well, Indian lab-grown diamond jewelry brand Firefly Diamonds has raised a seed round of $3 million led by Westbridge Capital. The investment is going to accelerate the brand's retail expansion plans, bolster its digital presence and fuel R&D. Founded in December 2023, Firefly has stores across 4 cities currently and plans to expand to over 20 locations in the next 2 years. For more on this, joining me now is Adit Bhansali, who is the co-founder of Firefly Diamonds. Adit, welcome to Startup Street and thanks very much for your time here. Start by telling us very briefly about this young brand that you're building and the opportunity that you see for the lab-grown diamond market in India.
Yeah, absolutely. So thanks so much, Ritu, for having me on. So I wanted to share a little bit about Firefly. So we started the brand around 1.5 years back, and my brother and I are the 2 co-founders. And the brand was basically built on a legacy of around 60 years in the jewelry industry, starting with my grandfather, that my parents have kind of continued into the same business. And they have an entire background in jewelry design and manufacturing. So what my brother and I saw was a huge opportunity in moving into lab-grown diamonds, which we feel like is going to be one of the most exciting segments of the jewelry market in India, which we all know is one of India's largest markets. And what we bring into that is we bring this jewelry design and manufacturing expertise so that the products that we're bringing to our customers through Firefly are the products that are of the highest quality, highest level of craftsmanship, and beautiful designs that are unique and help us stand out.
Well, Adit, you're essentially saying your family comes from a diamonds business, which I assume will be natural diamonds. So you're essentially betting against the family business and putting your money on its competitor.
Yeah, so I wouldn't say betting against it. I think the way we see it, I think both segments are gonna, exist today and will continue to exist even as lab grown continues to become bigger. The reason is I think there's always going to be some segment that will have that emotional attachment to having a natural mined diamond. But as I was saying before, there's going to be a much bigger new segment that's going to be coming in for whom lab grown is going to be the majority of the focus. So I think we see both things will continue to grow. And I think, the Indian jewelry industry is going to go from strength to strength.
Okay, and how do you plan to deploy this $3 million of seed funding that you've raised now?
Yeah, so I think there's a few different aspects to this. I think the first and most important one is we want to build a brand that's going to stand out and is going to be doing something distinctive. So for that, we're going to actually allocate a significant amount of the funding towards research and development of kind of different unique product collections that haven't been seen before in India. There are things that you can do with lab-grown diamonds that traditionally people might not have done with natural diamonds. So I think we're going to try to bring and create that distinctive product collection. Second is we're going to be using it for retail store expansion because that's the best way for people to see, touch, and experience the products. And then the third one is going to be into marketing because I think bringing a celebrity on board and other marketing initiatives to kind of get word out there, I think is going to be very important for us as well.
Okay, and speaking of retail expansion, so far you've been in all the 4 metros. Where will these next 20 locations be and how will you balance the physical retail with the digital growth?
Yeah, so that's a great question. I think for the 20 new locations, I think there's a couple, it's like a 2-step plan. I think the first is going to be now to deepen our reach within the existing cities where we are present. So we're currently in Mumbai, Pune, Bangalore, and Hyderabad. And I think we're going to continue to deepen our presence there because there's customers that are reaching out from different areas in those cities that are interested in purchasing, but are not able to physically make it into the stores we're in today. So we'll add more stores there. Then there's another market in other tier 1 cities, such as Delhi, where we know there is a large market and again, demand for the product. So that would be kind of the second step. And then the final step would be slowly starting to expand into tier 2. But that's where I think the online part will play a big role because we launch online. Our website will be going fully live in around 2 weeks from today. So once that goes live, we'll be available across most of India, and that'll help us gauge demand for the brand in smaller cities. And then that'll help us figure out where do we want to set up the next set of stores.
What kind of sales and average spend per customer trends are you seeing currently? And what are your projections for sales, revenues, and profits in the next 2 to 3 years, especially keeping in mind that lab-grown diamond prices have fallen sharply recently?
Yeah, so I think the sales numbers have honestly been really impressive so far. I think we've been very happy since the Mumbai store first launched in October. So it's been around 6 months there, and I think we've seen a very steady ramp up of sales. In terms of the average customer order value, I think that has also been higher than actually we anticipated. It's coming close to around 70 to 80,000 per customer. So that's showing that we have a large volume of people who are coming in for kind of lower priced gifting products that might be in the range of 20 to 40,000. But we are also seeing, customers coming in for that solitaire diamond ring or for a diamond bracelet or, solitaire earrings. And those prices can be north of even 2 lakhs. So I think that's kind of what this numbers are looking like today. I think what we're expecting over the next couple of years is, I think, one, for jewelry, existing customers are a big part of what your future sales look like. So as we continue to build that customer book, I think we'll be seeing a lot of repeat purchases. We're already seeing that just in 6 months. And in terms of, same store sales growth, I think we'll be expecting a good amount of that, even month on month. And then in terms of profitability, I think our stores are already, operationally, profitable at a store level. I think then marketing is obviously going to be a big cost expense that we'll have to kind of manage and be smart about.
All right, Adit, that's all the time we had, but thank you very much for your time here today, and we wish you all the very best with your business.
And moving on, Ayurvedic beauty is going luxe, with India's luxury skincare market set to hit $4 billion by 2035. Homegrown brands are stepping up their game. CNBC-TV18 Shivani Bazaz brings you an exclusive sneak peek into Kama Ayurved's premium makeover as it gears up to take on global giants.
A new look, new prices, new products for a new India. This is Kama Ayurveda's refreshed store in Mumbai, and for Kama, this is just the beginning of a new phase, where it takes the battle to some of the biggest players in India's glowing skincare market.
Well, the luxury skincare market is booming in India, and it's already valued at $1 billion and is set to grow at a 12% CAGR, expected to touch $1.6 billion by 2028, according to industry estimates. And it's not just the global giants. Ayurvedic beauty is having a moment too, growing at an even faster rate of 27%, according to industry estimates. Now, Kama Ayurveda, one of India's most recognized Ayurvedic skincare brands, is making a bold move, elevating its brand image, pricing, and product innovation to compete at a global luxury level.
But it's not just about turning up the luxury dial by putting old wine in new bottles. The new logo, the swankier stores come with revamped formulations as well. The company says its premium pricing rivals brands like Kiehl's and Clinique, all aimed at catering to the Indian consumers' rising aspirations and evolving tastes and preferences.
When we started the brand, we only thought of quality. The hair oil was some 400 or something rupees, when everything else was 40 rupees.
Yeah.
This new generation is willing to pay extra if the product delivers. And it's all natural.
But Kama is adamant that premium does not mean expensive. Not every product sports a higher price tag. The stores themselves are also no longer just outlets, but a place people can experience Ayurveda as Kama expands beyond skincare into holistic wellness. Its new stores will offer Ayurvedic consultations and treatments. It also already offers this in London, and its treatment rooms at Harrods and Notting Hill are already fully booked.
One is obviously this consultation space, okay, with the therapist, with the doctor who will come and consult with you, specifically tell you what you want to. There are nice tools over here. You can sit down and actually try the products out. Earlier it was standing only, so you can sit down and try the products out. And then in the bigger formats, once you have a larger space, like we have one in Delhi, but it'll be expanding, I think, around the country, is treatment rooms. So basically face treatments, hair treatments, and body treatments. So you can physically come in, get a doctor's consult, figure out what you need to do, and then get a physical facial, hair treatment, body treatment.
With global brands investing in Indian Ayurvedic companies to global brands making a beeline to enter the Indian beauty market, it's evident that the world recognizes the potential of India's beauty industry. Kama Ayurveda's transformation is not just about elevating a brand, it's about setting new standards in luxury skincare, both locally and globally. In Mumbai, this is Shivani Bazaz.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.